I just believe that everybody should own physical gold. The dichotomy between, like oil and gas, the enterprise value of the best gold producers and the gold price is at historic lows. And if the gold price continues to do what I think it will do, which is to say go up, the gold producers will enjoy a catch up. So investors need to be in the space. The biggest moves, of course, will be in the alpha part, the speculation. That's not suitable for everybody. That's only suitable for people who can stomach volatility, accept real risk, and do a lot of work. But I think that gold as a sector is unique in that it warrants a lot of attention for savers, for investors, and for speculators.
Since setting a high in late October, gold prices have been digesting and consolidating, taking the form of a symmetrical triangle. State Street Global Advisors, among the top institutional backers of Australian-listed miners, said gold could run as high as $3,100 in 2025 after setting 41 new closing highs through a watershed 2024. Known gold bull and Sprott US Holdings chief RickRule underscores the necessity of owning physical gold, calling it vital insurance for all. He points to the historical undervaluation of gold producers and predicts they'll offer significant investment opportunities as gold prices rise. In 2024, gold made 38 new daily highs in US dollar terms, matching 2011, the peak of the global financial crisis, with the most fresh records since the inflation and geopolitics price surge of 1979. For UK, Euro, and Japanese yen investors, gold hit a record number of new records last year, setting 40, 44, and 45 fresh all-time highs, respectively. Based on fundamentals, Rick recalls gold's historic performance, citing the 1970s and 2000 to 2010 periods when gold prices increased 30-fold and 7-fold, respectively. Rule stresses that he doesn't buy gold for modest gains, but out of concern for the possibility of a significant 3- or 4-fold price surge. For investors, Rick underscores the exceptional value in investment-grade gold stocks, predicting substantial rewards if gold prices continue to climb. According to him, the U.S. government's massive liabilities make inflation inevitable, while he criticizes favoring long-term treasuries over gold. Gold stocks may be valuable in an investor's portfolio, especially during high inflation and economic uncertainty. As gold prices have retreated, investors may want to wait for a breakout in the S&P Gold Shares ETF to gain exposure to gold. Now we present the clips of RickRule's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Gold itself for savers. I regard gold as insurance. We probably don't have enough time in this interview to go over that, but I think that anybody who doesn't own physical gold, well, I won't insult them. I just believe that everybody should own physical gold. The dichotomy between, like oil and gas, the enterprise value of the best gold producers and the gold price is at historic lows. And if the gold price continues to do what I think it will do, which is to say go up, the gold producers will enjoy a catch up. So investors need to be in the space. The biggest moves, of course, will be in the alpha part, the speculation. That's not suitable for everybody. That's only suitable for people who can stomach volatility, accept real risk, and do a lot of work. But I think that gold as a sector is unique in that it warrants a lot of attention for savers, for investors, and for speculators, which are three different classes of human being.
Mm-hmm.
I really think it's a simple thesis. And it's a thesis that when it plays out, generates spectacular benefits. You know, Adam, I'm not one of those who suggests that you buy gold because it might go from $2,700 to $3,000. I'm one who suggests that you buy gold because I remember the decade of the 70s or the decade 2000 to 2010. In the first instance, the gold price went up 30-fold. In the second instance, the price of gold only went up 7-fold, which is to say, I don't buy it because I think I might enjoy a 15% move. I buy it because I'm afraid of a 3- or 4-fold move, literally afraid of a 3- or 4-fold move. In the investment side of the business, I buy it because it is historically, by it now I mean investment quality gold stocks, they are historically cheap. And if I'm right about the gold price, I'm really, really, really right about the senior producers. And if you look at the on and off balance sheet liabilities of the US government and their ability to do anything about that other than inflate away the net present value of their obligations, I think the chance of that is nil. If you look at those two circumstances and you still own long-term US treasuries in favor of gold, it's because you flunked arithmetic in school.
Regarding the oil and gas sector, RickRule mentions factors like geology, energy prices, capital costs, and environmental concerns impacting production. He views Trump's election as reflecting a shift in sentiment toward reduced regulation and economic growth rather than specific policies. Exactly a week before Christmas, millions of American borrowers received a welcome gift, a third interest rate cut in a row. However, stock markets fell sharply because the world's most powerful central banker, U.S. Federal Reserve Chair Jerome Powell, made clear they shouldn't expect as many further cuts in 2025 as they might have hoped for as the battle against inflation continues. However, the biggest difficulty for global growth is uncertainty, and the uncertainty is coming from what may come out of the U.S. under Trump 2.0, says Luis Oganes. Concurrently, Rick predicts that Canadian oil and gas will benefit significantly from Prime Minister Trudeau's resignation, citing reduced political constraints. He forecasts 5 strong years for Canada's energy sector, but cautions that policy changes take time to reflect in market outcomes. Let's get back to the interview.
I think that the perception in the market around inflation is one of confidence, which is to say that people believe that inflation will be low and is falling. I believe that's misplaced. You and I have talked before on your show about the fact that the CPI, from my point of view, doesn't measure the deterioration in the purchasing power of our currency. And I believe that our currency is depreciating at more like 7.5% than it is at 2.5%. So I draw different conclusions than many investors draw. I hope I'm wrong. I think I'm right. By the way, I believe that the US dollar will continue to perform well against other currencies, which is to say, I expect it to be relatively strong, but absolutely weak. Suffice it to say, many of them have to do with the aggregate level of government debt and deficits. I don't think that the importance of the Trump election is Trump himself, but rather the fact that he represents the beginning of a change of sentiment among Americans, where less regulation, more prosperity, and less narrative is important. I'm not sure that Trump himself will be able to affect very much legislative change around the oil and gas business. But the de facto opposition, evidenced by Biden to things like the construction of liquefaction plants or interstate transmission, is gone. And I think that's a good thing. But I think more importantly, it reflects a changing will among the American people around economic development and around resource development, which I think is healthy. One needs to understand that drill, baby, drill is a function of geology. We've drilled a lot of our good locations in the last 5 years. It's a function of energy prices. Lower energy prices turns off the drilling tap very quickly. It's a function of the cost of capital, and it's also a function of the march of technology, not to mention local regulation. One example that many people don't think about, and I only became aware of recently, has been the increasing problem in places like the Permian with the disposal of salt water. We're generating so much byproduct salt water that our ability to inject it into locations without damaging groundwater, or in fact creating seismic events, is beginning to call into question the challenges, the mere challenges around saltwater disposal. Not something that we considered 2 years ago, but something that we have to consider, not from a narrative viewpoint, but from an actual environmental viewpoint. It's very nuanced. The thing that's particularly appropriate to talk about in terms of energy politics today, though, isn't the United States. The Prime Minister of Canada, a noted opponent of the oil and gas business, has decided to pursue other employment alternatives, which is a wonderful circumstance for the Canadian oil and gas industry. That Prime Minister, Monsieur Trudeau, decided that there was no business case for Canadian natural gas, despite the fact that the Alberta gas price for that was $2 Canadian per thousand, and the selling price for that same gas in Rotterdam or Shanghai was $13.50 Canadian, taking, say, $2.50 or $3 Canadian to get there. Thanking and excusing Mr. Trudeau is, over 5 years, I think, a game changer for the Canadian natural gas business and the Canadian heavy oil business. And the impact on the Canadian heavy oil business may be further benefited by Trump to the extent that access to the U.S. Gulf Coast refining market, an area where there was substantial investment to process heavy, sour Venezuelan and Mexican crude, which they no longer can process, being able to match up with heavy, sour supply from Alberta, because of the removal of political constraints in both the United States and Canada, has the potential over the next while to be an absolute game changer for the Canadian oil and gas space. I think today's announcement are the harbinger of 5 very good years for Canada. Don't expect this to be reflected in the market in the next 10 days or 2 weeks. That's not the way the oil and gas business works.
Right.
It takes a year or 2 years or 3 years before a change in policy is reflected in the free cash flow of the producers. That notwithstanding, the biggest headwind that the Canadian oil and gas business faced has decided to pursue other employment opportunities.
Gold should be considered a diversifier within an investor's portfolio, offering protection against inflation and geopolitical risks. Inflation may rise again under a second Trump administration, reinforcing a bullish outlook for gold in 2025. Do you believe gold's upward trajectory and the evolving energy landscape could reshape global investment strategies in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.